What's going on, you guys? Today we are going to talk about my favorite trade setups. Everything that I love to see in a chart, just what really gets me going in the morning, gets me excited about trading, all that. We're going to talk about it in this video, so make sure you watch it. Do you think that'll make people watch it? Shout out to Bitget for sponsoring this video series. If you want to try Bitget, they have a mobile app. I use their mobile app and their website. I didn't have to KYC or anything like that. Make sure you check it out. There's a link below and you can save up to 15% on your trading fees. But anyway, let's get right into the content. All right, so the very first thing that I love is Trendline Breaks. I don't care if it's diagonal. I don't care if it's horizontal, okay? You can do a diagonal trend line. You can do a horizontal trend line. Doesn't really matter. They can go any direction. I like Trendline Breaks because those usually give me a good indication of where short-term price action will go. If there is a trend line here that breaks above, then I expect price to go above, at least in the short term. If price breaks below that trend line, I expect it to go below, at least in the short term. Very simple strategy for momentum trading. And not only that, the more touches on a trend line, the better. Okay, so if I have a trend line here that has one touch, it's not even technically a trend line, okay, and then it has another touch and goes above, like that's not really a trend line. But if I have one touch and then two touches and then three touches and then four touches, that starts to get me interested, because the more touches this has, the bigger and stronger the breakout's usually going to be. So more history for a trend line, the more important it is, and the more likely price is to move in the opposite direction quickly as it breaks. All right, so that's one thing I really like to do is trend lines, and we have a really nice example right here. We've got this nice horizontal trend line. Okay, we've got 1, 2, 3. You know, depending on how tight I put this, we've got about 1, 2, 3, 4. On the fifth touch, what happens? We've got a diagonal trend line here, and you'll see we've got 1, 2, 3 touches, and then on the fourth right here, it breaks. And it even retests as well. All right, so that's a really nice trend line breakout. And you can see here the immediate momentum after these trend line breaks. So that's what I really like. Makes for a really good trade. You can do it with patterns if you're doing a head and shoulders or an inverse head and shoulders, or if you're doing a bull flag or a bear flag. Find an important trend line with multiple touches on it and monitor it. It's pretty simple. Like even here, we could monitor one right here. All right, you see this one has 1, 2, 3, 4, 5 touches on it. So if it breaks down, we're likely to see price go in the opposite direction rather quickly, right? So that's a good trend line to monitor. You can do it with any trend lines, anywhere. You can draw them anywhere you like. Look at this. Here's another trend line. Of course, you want to wait for confirmation of closes below trend lines to really take the most advantage. But I talk about that in other videos. But trend lines are definitely one of my number one plays, especially for my momentum style of trading. Another setup I like is volume divergence. And what I mean by that is basically if price is going up and volume's going down, that's a divergence. Or the opposite, if price is going down and volume is going down, then that's also going to be a divergence. And basically what that means is if volume is dropping as price is moving in a certain direction, then it's saying there's not that much momentum with that move. So what you see here is I actually caught this trade a couple days ago, and on Twitter I posted it. But you can see here we have a very, very, very low volume drop here on shop. All right, on this 5-minute chart. So look at this, is like the biggest candle locally, and it's the lowest volume. So what that's telling me is that that was really not, there's no momentum behind that. It was mostly just price falling without many people interested, and it fell to support as well. So low volume price drop, high volume price increase, we get a very nice bounce there, and that makes for a really great momentum trade. Again, we could see the same thing happening over here on the 30-minute chart. We've got price dropping here, okay, and we have volume dropping here. So you can see it's a very nice, again, momentum divergence on volume. And what happened after that? we see price bounce. Now, even if it's just momentarily, you're catching some really nice quick trades, very low volume here. And when volume dries up, that's saying that there's lack of sellers now. And what happens when there's lack of sellers is buyers are forced to step in, and then people will panic sell higher if price is going to continue down. But price very rarely just goes down in a straight line or up in a straight line. So you can always kind of couch these quick little counter moves in trend when there's a lack of momentum on that given time frame. So on Bitcoin, here's another great example. You see that volume is dropping off as price is relatively staying the same, and that creates another volume divergence. You could see that momentum shifts in the other direction, and that would be another nice trade for me. And again, we have one more good example here. We see buyer volume dropping as price is rising, and that's basically showing a lack of momentum on that move. And what happens after that is price moves in the other direction. So again, that is a volume divergence or a momentum divergence or a shifting of momentum. And those are another one of my favorite types of trades to catch, especially on low time frames. Another pattern I really like to trade is double tops or double bottoms. And I actually have a video solely dedicated to that. I can post a link above. But you can see here, we have an initial rejection. Okay, that's the first top. Price rebounds, second rejection, that's the second top, and that leads to a rejection. And now you don't always have to short the very first part or long the very first rejection, okay? Or sorry, you don't always have to short here or long here if it's a double bottom. You can wait for confirmation, making it for a less risky play, because if you get in here, you don't technically have confirmation and price could still break up. But what you do have, if you wait, is once price breaks below here, below this bottom here, because you've got a nice M here. So once price breaks below the M, that's your confirmation. Okay, so it makes it a less risky trade and it makes it more high probability that price will continue down. And your target for that, you're just going to draw your line from here to here. Okay, top to bottom, put it here, and you're going to say, bam, there's the target. Easy trade, one of my favorite patterns, and it's going to look the exact same if I invert the scale. It would look the exact same if it was a double bottom, be the very similar. And again, I do have a full video dedicated to explaining what to look for on these targets, etc., etc. So if you want to check that out, you can look at it, click on that and save it for later. Patterns are very good for trading, but you need to understand how they work. So, you know, a lot of people just think they're going to buy a bull flag, but it's not actually a bull flag, or the volume doesn't match up, right? Or one thing can happen too is if you have a bull pennant or a different pattern, if a pattern goes all the way to the apex of the triangle, it's usually invalid, and sometimes it'll go straight through, or a lot of times it'll break out in either direction and fake out the other way. So if it goes all the way to the end of that triangle, it's likely not a real pattern, and you should basically just scrap it. Most times, if they're going to break out in either direction, it's going to happen earlier on, okay? And that's going to make it more valid. My very last favorite trade setup is candlestick patterns. Everyone is seeing the same patterns on the chart, so candlestick patterns can be very effective if you know how to use them. To go along with that double top I just talked about, you will notice that we have a rejection candle here. All right, this is a trend reversal candle. This could be a shooting star or gravestone doji, whatever you want to call it. That is a picture perfect trend reversal candle at resistance. It also leads to and causes an evening star pattern. Okay, this is an evening star pattern. You have price up, rejection or doji, price rejects down, similar level, and those are usually a good trend reversal pattern. And if you flip it over, you would see a morning star pattern. So that is one of my most favorite patterns to short, would be an evening star pattern. Really high hit rate on those, really clear invalidation level as well. And when you get multiple confluences, like you're at resistance, you've got the rejection candle, then you've got the evening star pattern, you get multiple confluences built up together, and that's just going to give you more confluence. You know, you've got OBV dropping, so you start to get all of these different confluence factors put together, and that's going to make for a really good trade. Thank you guys so much for watching this video. I really hope you enjoyed it. If you did, make sure you smash that thumbs up. Watch the other videos in my series. Subscribe to my YouTube channel. Give me $5,000, and I will catch you guys next time. Oh, you don't really have to give me $5,000. I was kidding about that part, but if you want to, you know. I'm all jacked up on Mountain Dew.